Thank you so much for joining us today. I'd like to welcome you to the webinar today. I'm Russell Wyrick. I'm the Executive State Director of the New Mexico Small Business Development Center Network. As you know, the NMSBDC is a statewide program that provides no-cost confidential business counseling and low or no-cost training to entrepreneurs across the state. Also included as part of our statewide program, as you know, we have the Procurement Technical Assistance Centers that can help you with, if you're interested in government contracting, they can help you get registered, look for opportunities to bid on. We have our International Business Accelerator that can help your business get started and launched in international trade opportunities. And our Technology Commercialization Accelerator at New Mexico Tech that can help you with your intellectual property and getting your technology to market. So again, our topic today is the PPP loans and the Employee Retention Tax Credit. On January 19th, the U.S. Small Business Administration, they announced that it has already approved 60,000 PPP loan applications. I'm sorry, approximately 60,000 applications submitted by nearly 3,000 lenders for over $5 billion. And then between the programs reopening on Monday, January 11th at 9 a.m. through Sunday, January 17th, last week, the PPP provided dedicated access to the community financial institutions that specialized in serving underserved communities, including minority women and veteran-owned small businesses from Monday through Thursday. And then they were joined by smaller lenders. As of today, on January 20th, the Paycheck Protection Program is open to all the participating lenders. Today's speaker is Neil Bradley. He is the Executive Vice President and Chief Policy Officer for the U.S. Chamber of Commerce. In his role, he's responsible for the overall policy direction of the Chamber. Neil previously spent almost 20 years working for leadership in the House of Representatives and has a unique ability to sort through a large bill. And again, this bill is very large, as we talked about, over 5,000 pages, and break it down into understandable terms, which is really helpful at this time. We're so fortunate to have him. I've seen a lot of speakers and presenters. The U.S. Chamber of Commerce is just incredible. We use them as a resource firm. We use them to help us understand the data we need to help you. So we're so privileged to have Neil with us today. Before I turn it over to Neil, I want to congratulate you, Neil, on your team and all the outstanding work that you've done across the nation, getting this information out to the public and understandable, practical language rather than all the the legislative legal talk that is in those bills. So it's great to have you, and we are so appreciative that you're here. Thank you very much.
Well, thank you, Russell. It's a pleasure to be with you. You are exactly right. Boy, it is sometimes like our lawmakers write the bills for the purpose of no one being able to understand them. At least sometimes that's what it feels like going through them. But the things that we're going to talk about today really are critical for small businesses there in New Mexico and across the country. And we're really grateful for the work that you're doing to make sure that small businesses who really are going through unprecedented and difficult times know of the help that is available to them, and help them make the right decisions and look in the right places for the resources that are out there. We know that that small business owners just want to run their business. The last thing they want to do is help figure out how to navigate, all of these government programs. But in moments like this, it really is essential, and we're honored to be here with you to talk about some of these programs. Today, we're really going to focus on the provisions that were enacted into law as part of this pandemic relief bill that the president signed on December 27th. It builds on the work that Congress had done really back in the spring of 2020. And in particular, it builds on the work of the CARES Act. That was kind of the landmark pandemic relief bill enacted by Congress last spring that created the Paycheck Protection Program and the Economic Injury Disaster Loan Grants. And it created the Main Street Lending Program at the Federal Reserve. And it authored a new tax credits for small businesses. Over the course of the summer and the fall, a lot of those programs expired as a result of Congress in the spring just not knowing, as none of us did, how long this pandemic would go on. The bill that was signed in December both relaunches some of those programs, but makes important changes that are really crucial to understanding if you're thinking about trying to take advantage of any of these programs. So I want to start by pulling up, I think we have a slide here. And the first one I want to pull up and talk about really the two programs, Russell, that you mentioned in the introduction, which is the Employee Retention Tax Credit and the PPP loans. And so if we have that slide on ERTCs and PPP, if we can bring that up. Excellent. There we go. So the reason we like to use this slide is because it kind of helps focus on kind of the key aspects of this. And I want to begin with the Employee Retention Tax Credit. The reason that small businesses should pay attention to this is simply because of the size in terms of financial assistance it can provide to an employer. What it provides in the year 2021 is up to a $14,000 per employee refundable advanceable tax credit. And those two words, refundable and advanceable, are quite important. We generally think of tax credits as something that we do in April when we're filing our annual tax returns, and maybe we get a refund or maybe we owe a little bit less. This tax credit is different. This is a tax credit that applies against the payroll taxes that you as an employer remit to the federal government. So you pay your employees, obviously you deduct payroll taxes from that, you remit that to the federal government. This tax credit applies against that remittance. And it's refundable in the sense that if the value of your tax credit exceeds what you would otherwise be remitting to the federal government sends you a check. And it's advanceable in the sense that you don't have to wait till you do your quarterly filings with the IRS, notifying them of how much payroll taxes you withheld to receive the tax credit. You can actually request an advance on the tax credit if cash flow is a problem for your small business. So who qualifies for this? In general, even though it has broader applicability, for today's purposes, what we're really talking about is businesses with 500 or fewer employees who have experienced more than a 20% decline in gross receipts in a quarter compared to 2019. So we're in Q1 of 2021, and if in this quarter you experience more than a 20% decline in gross receipts, you anticipate, based on the way your business is doing, you're going to have less than that, you qualify for this employee retention tax credit. Also, you may recall that this tax credit existed as part of that CARES Act, that bill that we talked about from the spring. One of the reasons that a lot of small businesses didn't take advantage of the employee retention tax credit was because there was a prohibition. You had to either choose to take a PPP loan or take the employee retention tax credit. Congress has retroactively repealed that prohibition. Now you can take a PPP loan and take advantage of the employee retention tax credit. Importantly, because that is retroactive, one of the things that your small business can do is you file your quarterly 941s for the payroll taxes that you withheld for the fourth quarter of 2020. You can look back and you can get up to a $5,000 credit per employee. And if you have fewer than 100 employees, it can apply to all of your employees without restriction. So how do you take advantage of this? This is obviously administered through the IRS. So this is one where you're going to want to talk to your tax preparer, whoever does your payroll processing, basically who's responsible for keeping your books and remitting your payroll taxes. That's the person who's going to help you navigate, along with your tax preparer, this employee retention tax credit. As I mentioned, it's administered by the IRS. If you simply Google IRS employee retention tax credit, you'll go to the IRS homepage where there's more information, including the application forms to take advantage of the tax credit. You should note, however, when you go there, you'll see a big yellow box at the top that they haven't updated any of their guidance or any of their forms to reflect the changes that were made in this December 27th law. Importantly, the changes that we talked about just now. Let me turn to the second program that's really worthy of attention, and that's the second draw PPP loan. I should mention, if for some reason you qualify for a PPP loan, an original PPP loan, and you haven't received one, you didn't apply, you didn't think it worked for you, now you're rethinking that, the original PPP program has also been reopened. And as of yesterday, in fact, the SBA was accepting applications from lenders for both the original PPP program and the second draw PPP. So what is the second draw PPP? It looks a lot like the original Paycheck Protection Program. It is a forgivable loan of up to $2 million. So not quite as big in terms of the maximum loan as the original PPP, which was $10 million, but still pretty sizable for most small businesses. Who qualifies? The qualifications are slightly different for the second draw PPP loan. Here, it has to be a business with fewer than 300 employees. You'll remember that the original PPP was 500 or fewer. This is 300 or fewer, so a generally smaller subset of businesses. The business has to have experienced a decline in gross receipts of at least 25% in a calendar quarter of 2020 compared to the same calendar quarter in 2019. And I really want to pause here because this is an important point. A lot of folks look at this and say, well, my business has to be off by 25% in the year 2020 relative to the year 2019 to qualify, or my business has to be off 25% in every quarter. That's not the case. What the law says is that your business has to be off by more than 25% in one calendar quarter of 2020 relative to the same quarter in 2019. So for most small businesses, usually the second quarter of 2020, when the pandemic hit, when we had those first round of closures, that was a quarter in which most small businesses experienced their largest losses. And if your loss, your reduction in gross receipts was more than 25%, you qualify on that basis alone for this second draw PPP. Like the original PPP, this is a loan that is provided through financial institutions. So you will go to your bank, your credit union, a CDFI. Generally, if you're getting a second draw loan, you'll go back to the lending institution that helped you with the first draw, although that's not required, though, because much of the paperwork's the same. A lot of the small businesses we talk to are going back to their original lender for this second draw PPP loan. It is forgivable, just like the original loan, with the same type of limitations. So you have to use for certain qualified expenses in order for the loan to be forgiven, and at least 60% of those expenses have to be on payroll. And so otherwise, if you're familiar with the first round PPP loan, most of the requirements of the second draw loan will be very familiar to you as well. The big question is just making sure you meet that 25% reduction in gross receipts threshold. Let's go to the other slide here, and I want to briefly talk about two other provisions in this new law that are worth paying attention to. Let me start with the targeted EIDL grant. And let's take a step back and discuss the EIDL program. The EIDL program, and EIDL stands for Economic Injury Disaster Loan. This is a long-standing program administered by the Small Business Administration. If your business has experienced a wildfire or a flood, I happen to be from Oklahoma, we have lots of tornadoes. So when small businesses experience tornadoes, the EIDL loan program is a program that often small businesses turn to for long-term, 30-year, low interest loans to help them rebuild their business. As part of that original pandemic relief bill last spring, Congress said that COVID, the pandemic, actually qualifies as a disaster and opened up the EIDL loan programs for businesses that were suffering because of the pandemic. It also created a $10,000 grant and said if you apply for an EIDL loan, you can also at the same time apply for an EIDL grant and get this free $10,000. Not surprisingly, the $20 billion that Congress originally provided disappeared rather quickly. This program has been shut down since the late summer, early fall. This new law reopens it, but it's targeting the EIDL grants, those $10,000 grants, to a subset of small businesses. Who is that subset? It's small businesses with 300 or fewer employees who are located in a census tract that is eligible for the new market tax credit. If you don't know whether you're in one of those census tracts, you can simply Google new market tax credit. There are maps on the Department of Housing and Urban Development's website that allows you to enter in your address, and it'll bring up the map and show you whether you're in one of those census tracts to qualify. You also have to have had experienced a 30% reduction in gross receipts for an 8-week period between March 2nd of last year and the end of last year, compared to a similar period, either the year before or before March 2nd, meaning before the pandemic really struck. Now, this program I mentioned is operated by the Small Business Administration. You apply directly through them on their website. If you go and Google SBA EIDL grant right now, it'll take you to that website. What you'll see is that they have not updated and reopened this grant program as of yet. We expect them to do so any day now. We also expect some clarification around how you demonstrate, for example, that 30% reduction in gross receipts. But this is an area where we're waiting on a little bit more information from SBA. And obviously, as of a few hours ago, the political leadership team at the SBA switched from the Trump administration to the Biden administration. So there's still a lot for them to work through, even in the midst of this political transition. So stay tuned, go to that website at the SBA if you're interested in that. Let me turn to the last one that's gotten a lot of attention. This is called the Shuttered Live Venue Grant. And this is brand new. This has not existed before. This was created in that December law, and it's really targeted to live venue operators, promoters, independent movie theaters, arts organizations, talent representatives, theaters, for-profit, nonprofit, basically businesses or entities who exist on putting on live performances. It is very specific in who qualifies for this. One of the common questions we get is, someone who has a restaurant or a bar and they have, live music on Saturday night. Does that make them a live venue operator for purposes of this grant program? And the short answer is, unless it's almost certainly not. There could be a rare circumstance where that's the case, but almost certainly not, because it's really targeted to businesses who make more than 70% of their revenue selling tickets in advance for those type of performances. And that's really the principal source of their revenue. If you do qualify, what can you receive? It's a grant of up to $10 million. Or 45% of the gross earned revenue of the live event of the entity in 2019. You have to have experienced a 25% reduction in gross earned income in order to qualify, although obviously for most live venues, that's a threshold that won't be hard to meet. This is an exclusive program, meaning that if you take advantage of the live venue grant, then you're prohibited from also receiving a PPP loan. But as you can see, it can be worth a lot more. It's a grant. You don't have to worry about forgiveness. And if you meet the qualifications, it's pretty generous compared to a second draw PPP program. This program will be administered by the Small Business Administration. They are similarly like EIDL in the process of updating their guidance and applications. They've just begun putting information on their website. We don't know when the program will actually open and begin accepting applications, though we expect that to happen in the not too distant future. And this is a good place to kind of go back to and check in on the SBA website if you think you qualify for this. One of the questions we often get is, how can I be sure that I might qualify? And this is one where, despite my earlier statements about the difficulty of reading the law, going in and looking at some of the specifics in the statute could be helpful, and because it really does specify that you have to have that 70% of income. You have to have, for example, ticket sales. You have to have a lighting system and a sound and AV system or a production system in order to qualify. So it really is more sophisticated events and structures that qualify for this. We can take those down now, and I want to spend a few minutes talking about some of the other changes that's worth paying attention to that I know folks are interested in around these programs. And let me start with some of the improvements that Congress made to the PPP program. And perhaps the most welcome for a lot of small businesses was this clarification around the tax treatment of PPP loans. You may recall that midway through last year, the Internal Revenue Service declared that while forgiveness on a PPP loan wasn't taxable, because Congress said forgiveness wasn't taxable, the IRS was going to prohibit small businesses from claiming a deduction for the expenses that they paid for with their PPP proceeds, which effectively functioned as taxing the PPP loan. Congress wasn't too fond of this idea. They didn't anticipate the IRS doing that. Congress has now overruled the IRS, and so now there are no tax implications for receiving a PPP loan. You won't be taxed on the forgiveness of the loan, and you will be able to deduct the expenses that you pay for with a PPP loan, just like you deduct all the other normal business expenses in the course of your operation. A second big change was around the forgiveness process. There's been a lot of concern that the forgiveness process, particularly for smaller businesses who receive smaller loans, was simply too onerous. And so Congress has required that for loans below $150,000, that there be a one-page forgiveness process. In fact, just yesterday, the Small Business Administration updated their forgiveness, their guidelines for loan forgiveness and their applications for loan forgiveness. And so if you have a loan below $150,000, you don't have to submit all the additional paperwork. You get to fill out the one-page application, and it essentially functions as an automatic presumption of forgiveness, which is, I know, welcome news to a lot of small businesses who are worried about navigating that forgiveness process. There have also been some changes around eligible expenses with the PPP program. You may recall that under the original PPP program, eligible expenses included payroll and associated benefits for your employees, rent, utilities, interest on a mortgage for the property associated with your business. And those were generally the only allowable expenses. Congress has expanded that list. Perhaps most notably, now expenses that you've incurred as a small business for public health and safety improvements to fight COVID. So if you've installed plexiglass in your business, if you've installed a drive-through window or created curbside pickup or have altered the physical layout of your business in response to COVID, then those expenses qualify as eligible uses of your PPP loan. Similarly, a lot of small businesses have acquired accounting services, cloud computing, other things to manage their expenses, particularly related to the PPP loans. now those are eligible expenses. Similarly, if for certain supplier contracts that you might have, either for essential items for your business in a supplier contract that you entered into prior to receiving the loan, or for perishable items, and this is really important for restaurants and other food service, for any perishable item, any contract or anything that you procure that's essential for your business, those supplier costs can count as eligible PPP expenses. Now, while that's good news, meaning there's more ways to use your PPP proceeds, it is important to remember that the 60-40 rule continues to apply. And the 60-40 rule simply says that at least 60% of your PPP loan must be used for payroll expenses in order to have your entire loan forgiven. If you use less than 60% of your PPP loan amount for payroll, then you won't have your entire loan forgiven, and you will have some remainder that you have to pay off, to pay back, just like you would an ordinary loan. So those are some of the changes, around the PPP program that have been most impactful for small businesses. Let me take a little moment and talk about what we expect next and how this may unfold. So as I mentioned, Congress passed this bill in December. The president signed the law on December 27th. You may have heard that President Biden is submitting a proposal for Congress for another $1.9 trillion in supplemental funding. Most of that is for vaccination programs and reopening schools and assistance for state and local governments. He has suggested some additional money for small businesses, though it's not clear when this package might get through Congress and what might be in it ultimately were it to clear Congress. One of the things that we're hearing from a lot of lawmakers, particularly with respect to the small business and the business side of it, is they want to see how these programs, particularly the employee retention tax credit and the second draw PPP and the live venue grant, how those work before they necessarily inject additional funding into them or create a new program. So we expect that the programs that we've talked about today really will be the core of what's going to exist for the next several months. The PPP program is open through the end of March. You heard Chris talk a little bit about, Russell talk a little bit about how much funding has already been provided. That is a small portion of what was allocated by Congress. We do not at the moment anticipate that the PPP program will quickly run out of funds. This is not going to be a repeat of the spring in which the program essentially in 2 weeks was depleted of all funding. We think there's adequate funding likely to go through the March deadline, but certainly very close to that. And so if you're contemplating taking advantage of the PPP, well, it's always prudent to get your stuff together and get your loan application in. It's not a situation in which you have to worry about them running out of money this weekend, for example. So let me pause there. I know we've had a lot of questions coming in into the Q&A and chat function. We'd be happy to take your questions and talk about either these 4 programs or some of the other aspects of the relief law.
Perfect. Let's get those started. I'm Christopher Garcia, and I'll be asking the questions today. Susan asks, is the employee retention tax credit a one-time credit, or can it be claimed in both 2020 and 2021?
So it can be claimed in 2020 and 2021. The tax credit is smaller in 2020. So in 2020, it is a 50% tax credit on up to $10,000 in wages. So $5,000 per employee. In 2021, it's more generous. It's a 70% tax credit on up to $10,000 in wages per quarter. So $7,000 tax credit in Q1 of 2021 and another $7,000 in Q2 of 2021. The tax credit does expire after June 30th, so it is just for the first 2 quarters of 2021. that you're eligible to receive it. And the only real limitation, well, two important limitations. Looking backwards in 2020, if you have more than 100 employees, the tax credit only applies to the extent that you pay an employee who is not performing their regular services. If you have fewer than 100 employees, it applies to all your employees. In 2021, that 100 threshold, 100 employee threshold has been moved to 500. So if you have fewer than 500 employees, it qualifies for all of your employees whom you're paying. One other quick note is you can't double dip. I mentioned that you can accept both the employee retention tax credit and the PPP, and that's true, except you can't claim them for the exact same payroll. So I describe it this way. Let's say you got a PPP loan last spring, and you use that PPP loan to pay your employees through the summer. That PPP loan ran out. You continue to pay your employees. Now you can take the employee retention tax credit for the last part of 2020 when you weren't using the PPP. Now we're in 2021, you go get a second draw PPP loan, and you're using that to pay your employees, let's say for January, February, and March. If you use it to pay all of your payroll costs in January, February, and March, you can't also get the employee retention tax credit for those same payroll expenses. But as soon as you've finished using your PPP loan and you've exhausted that, then you can claim the employee retention tax credit. So if you're looking at doing both of these, an employee retention tax credit and a PPP loan, you're going to want to think about how you sequence them. You're going to think about, okay, I'm going to use the PPP loan for, let's say, February and March after I receive it, and then I'm going to take advantage of the employee retention tax credit through the end of June.
Perfect, thank you. Susan also asks, when is the IRS expected to update their guidance on the employee retention tax credit, because they still state that you cannot claim the credit if you received a PPP loan?
Yes, we are banging on them. As I told our team yesterday, I'm getting a little frustrated because most people file their quarterly statement for the fourth quarter of 2020 by the end of January. That's 11 days from now. We're told soon. We're told very soon, but I can't give you an exact date. But we're pressing on them to get that updated guidance, to get the updated forms so that people can claim the credit.
Perfect. Hopefully soon. Let's see. Greta asks, can the employee retention tax credit be used for a nonprofit 501c3?
So there are some limitations if you are a nonprofit. If you are a nonprofit, you can qualify for the employee retention tax credit, but there has to, your business, your operations of your nonprofit essentially have had to have been shuttered in order to qualify. So the way the original employee retention tax credit worked is there's two ways to qualify: the reduction in gross receipts, or your business was shut down. It's kind of redundant because if your business is shut down, you're probably not taking in a lot of earned income, and your gross receipts are going to be down. For reasons that are beyond me, and we've asked, I still don't understand why they did this. Congress said that for nonprofits, your operations had to be shut down to qualify. They didn't use that reduction in gross receipts. So while a 501c3 can technically qualify, what we've discovered is for a lot of 501c3s, it's pretty difficult to meet the threshold test that your operations have been shuttered. But if for some reason your operations have been and you continue to pay your employees, you can take advantage of it. It's just for that shuttered business requirement, it just makes it a lot more difficult.
Very good, thanks. Roger would like to know if you could expand on the supplier cost and operational expenses for the PPP.
Yeah, so the operational expenses are really limited towards accounting, human resources, cloud computing softwares, that you're utilizing you've acquired as a small business, or utilizing as a small business, the expenses related to that, to manage your payroll costs, your PPP loans, et cetera. And so there's you can't cover all of your operations costs through that. It really is targeted to the, you've acquired these tax preparer services, or you've acquired special software to manage your books, and you can include that as an eligible expense. The supplier expense one is much more generous, though for businesses who don't deal in perishable goods, it really is limited to contracts or purchase orders that you made prior to receiving your loan. So some ongoing contract that you're in to get supplies for your business that are essential for your business, you're still obligated because of that contract to continue paying them. Some of you can count those expenses, pay for those expenses with PPP. If you deal in perishable items, food being the most obvious example, then over the course of your PPP loan, your covered period, you can pay for those perishable goods using your PPP proceeds. So in particular, if you're in the restaurant business, this will be something that you'll want to pay attention to because it'll help you maximize your loan forgiveness. You're still going to have to put 60% of your loan towards payroll costs to get 100% of your loan forgiven. That's that 60-40 rule I talked about. But if you have food costs, this is a great way of making sure that you're not leaving any money on the table. One of the questions we get is, for what period does this cover? And remember, for purposes of loan forgiveness, your loan forgiveness is calculated based on your expenditures for what they call the covered period. The covered period begins on the day that you receive your loan. So the day that money is wired into your bank account, your covered period begins. And your ability to count expenses, payroll, rent, utilities, supplier costs, towards your PPP loan and towards your loan forgiveness amount begins on that day. That ends 8 weeks, and it begins on the date of your choosing. That is between 8 weeks and 24 weeks after the day you received your loan. So for example, you could choose 12 weeks. You're going to do essentially 3 months for your covered period. You want to maximize your loan forgiveness then. Make sure 60% of your loans used for payroll, and you can use the other 40% for rent, utilities, and perishable goods. For example, if you have perishable goods for your business.
Perfect, thank you. Samuel asks, I would like to get a PPP loan. I did apply for a PPP loan in June of 2020 and was approved, but I didn't accept the loan. How should I proceed? I didn't like the lender that processed my first application. Should I approach another lender and start a new application?
So you declined the loan. You didn't accept the loan. You've never received a loan in that instance. So you are still eligible for a first round PPP loan. There's no requirement that you go back to the same lender. If you want to use a different lender, find a lender who's participating in the PPP program. I would let them know that you filed for a loan before and declined it, just so that if there are any flags in the processing, they understand why and are aware of that. But there's nothing that prohibits you from going to another lender and going ahead and getting that first round PPP loan.
Perfect, thank you very much. An anonymous attendee asks, my credit union is still not ready to accept applications for the second draw of PPP. Would you recommend I look elsewhere to apply before the money runs out? I did receive the first round, so I was trying to wait, but don't want to miss out.
I'm not terrible. I mean, I would ask if I were in your shoes. All I can give you is the advice. If I were in your shoes, I would ask when they expect to be ready to process. I want to make sure that this is not something that's going to take them weeks and weeks. But if they tell you that it's going to be a few days, I wouldn't worry about the funds running. The funds are not going to run out in a few days. So I would not be terribly worried about that. But obviously, if you don't have a comfort level that they're going to be ready, that they're not in the process of getting ready, that they're not going to be doing it, and that's causing you concern, you can always look to a different lender. But a couple of days isn't going to miss out. I would really want to try to get that assurance from my lender, understand when they're going to process, and based on that, make a decision as to whether I would look for another lender. And Chris, the evening sun here on the East Coast is coming straight in my eyes. So I'm going to close that blind and I'm going to be right back for your next question.
In the meantime, Sandra, I chatted over a question regarding your question. So if you chat the answer back, I'll ask that live.
Thank you. It's that time of the year, where the sun's low on the horizon and it comes right in, and it was getting my eye. So my apologies.
Very good. Casey asks, I acquired a business in October of 2020. I was wanting to know if I'm eligible for a PPP loan since technically I was only in business for the last quarter of 2020. The business was around since 1995, and I was told by my banker that I would be eligible since I acquired an established business that would count. Just want to double check with you and make sure that's the case.
Yeah, so the requirement for PPP is that the business had to be in existence on February 15th, 2020. And so if your business was in existence, and it sounds like it was February 15th, 2020, I don't think there's going to be anything that that prevents you from taking advantage of the PPP loan program.
Perfect. Sandra asks, can the quarter in 2019 be any of the 4 quarters, or is it the comparison first quarter 2019 compared to first quarter 2021? And that's referring to any of the programs, the Employee Retention Tax Credit or the PPP.
Yeah, so the Employee Retention Tax Credit in general, so all of the programs do the quarter of 1 year compared to the same quarter of the prior year, or in the case of the Employee Retention Tax Credit, the same quarter in 2019, if you were in existence then. So for the Employee Retention Tax Credit, Q1 2021 versus Q1 2020, Q2 2021 versus Q2 2019. If for the 25% reduction in gross receipts for the PPP second draw, it is any of those quarters of 2020 compared to the same quarter in 2019. There is an exception if you weren't in business. So it's possible, let's say, that you weren't in business in the first quarter or the second quarter of 2019, but you were in business by the beginning of 2020. So you can't do Q2 2020 to Q2 2019. There are special rules that tell you which quarters to look at in that instance. But in general, if you were in business, it's the same quarter compared to the same prior period quarter, either 2019 or 2020.
Perfect, thank you. Roger asks, is the targeted EIDL taxable? Are the expenses in the EIDL deductible?
It is not taxable, and any expenses that you pay for it are deductible. So they fixed it. They got ahead of the IRS. Congress got ahead of the IRS, go figure, and fixed the problem with EIDL as well.
Perfect. Samuel asks, SBA link to search for approved lenders for PPP loans has a very limited list of vendors. Are there more? Is there a more complete list of PPP lenders?
I am not aware of a more complete list. If you haven't found a lender and if you can't find a lender in your area based on what's on the SBA website, you may have to just make some calls.
Perfect. And a lot of online lenders are actually.
That's exactly right. Yep.
Yeah, I'm sending a lot. Vernon asks, would a dance class studio qualify as a live venue for the Shuttered venue program?
Highly unlikely because you're teaching students, and so the revenue source is students. Here, if you had a dance theater where you had professional dancers performing, and you sold tickets for people to take in the performance, and that was more than 70% of your revenue was from that ticket sales, and you paid those performers, those dancers, then you would qualify. But if you're a dance studio that's simply earning money from students that you're teaching to dance, you don't qualify because you're not paying professionals and earning revenue through ticket sales.
Perfect. Greta asks, we don't pay taxes except employee taxes. Can those be forgiven up to a certain limit?
I'm not sure I'm following the question. So employee taxes, your payroll taxes that you withhold and remit on behalf of your employees are what's used for operating the employee retention tax credit. But you actually have to claim that tax credit in order to keep that money and get a refund on any additional amount that you're owed. There's no way to simply not claim the credit and have your taxes forgiven. So there's no forgiveness there.
Perfect, thank you. Vernon asks, the 60% payroll requirement for PPP, what is the period in which that must go towards payroll?
So it's that covered period. That covered period begins on the date that you receive your loan, when that money's wired into your checking account, and it ends on a date of your choosing that is between 8 weeks after you receive the loan and 24 weeks after you receive the loan. And so this was a change that's new in the law. There used to be this 8-week and then a 24-week and then the alternative, and it was just super confusing. So Congress actually made it easier. They said the covered period begins on the date you get the loan, and you get to choose on the date that your covered period ends, as long as it's between 8 and 24 weeks after the date that you received your loan. Your expenses during that covered period using the PPP proceeds, that's what the 60%. Now that doesn't mean, by the way, that payroll has to be 60% of your overall expenses. It just means that of your PPP loan, you have to be able to demonstrate that you use 60% of it for your payroll expenses during that period of time, during that period, either between 8 and 24 weeks. Perfect.
Sally asks, is there any form of assistance for partnerships and LLCs where there are no employees but partners are material?
Absolutely. So LLCs and partnerships where the partners, owners take income from the business can qualify for this. The SBA, that's always been the case. The SBA actually did a very nice job over the weekend updating the step-by-step process that partnerships and LLCs use for making their PPP application. So I would suggest, go and look at the guidance that they put out over the course of the weekend, and they've really made it a lot clearer that you absolutely do qualify as an LLC or a partnership.
Perfect. Sally also asks, in attempting last spring to apply for an EIDL, the application will not allow two business entities to own another entity. In other words, we have a partnership that owns a commercial building, and that partnership is owned by two other partnerships, LLCs.
They have not made any. So if it was barred under the regular EIDL rules that kind of govern the EIDL program, which extended to the grant, they have not made any changes to that would overturn that decision. So if that was the rule in effect under the regulations of EIDL last spring, it would continue to be the case today.
Perfect. Lori asks, if you didn't apply for the first draw PPP, When you apply now, will you have to go through the first draw, or does it automatically go to the second draw?
No, you have to go to the first draw. To get a second draw, you have to have exhausted your first draw. If you've never received a PPP, your first stop is the original PPP, first draw, as we call it now. And then if you exhaust that, you can apply for a second draw.
Perfect. Lori asked, when the EIDL grant opens, you said originally you had to apply for an EIDL loan and then the grant. Can you just apply for the grant now?
So interestingly, you had to apply for the loan and the grant, but then you could say, I don't want the loan and I'm just going to take the grant. And that's going to be the same here when it reopens. So you still have to kind of go through this process, but you don't have to take the loan.
Perfect. Sally asks, I do not understand the employee credit. I think I hear you say it's applied against the taxes due. However, federal and state taxes are withheld from employee paychecks. Does this credit apply to the employee's FICA and Medicare contributions only?
It does. That's exactly what it applies to. So as an employer, you're withholding those payroll taxes and you are remitting them to the federal government. So what they're effectively doing is using that as the mechanism for the tax credit. And what they're saying is if let's say that you are going to remit $2,000 in payroll taxes for your employees, and you qualify for a $1,500 employee retention tax credit, then you only have to submit $500. If you are going to regularly submit $2,000 in those FICA taxes on behalf of your employees, remit that withholding to the government, and you qualify for a $5,000 employee retention tax credit, the federal government's going to send you $3,000 and you're going to keep the other two.
Perfect.
I agree. They've made it very complicated, but what they're trying to use is they're trying to use that money that you're responsible for remitting as the mechanism and the tool in which to give you the tax credit.
Perfect. Susan asks, also, is the 20% reduction in income applicable only to 2021 and the 50% shown on the IRS website application to 2020, or is it 20% for both years?
20% for 2021, and you're right, 50%, I believe it is 50% for 2020 in the quarter in which you're claiming the credit.
Perfect. Susan also asks, can it be claimed in more than one quarter in 2020?
They did something tricky in the law, which is a good trick. Normally tricks are bad. This one's pretty good. What they've said is that payroll tax wages paid in quarters prior to the fourth quarter of 2020 can be counted as if they were paid in 2020 for the purpose of the credit, which essentially is a way to make sure that you get the full, you presumably could qualify for the full, if you paid more, your employees more than $10,000, that you qualify for the full $5,000 credit. But again, this is something that the IRS is going to have to make a change in their form and in the form that you their guidance and in the form that you submit to take advantage of it. So they have gone back and allowed you to reach back into prior quarters of 2020. But again, the IRS has to update their information and their forms so you can take advantage of that.
Perfect. Thank you. Since we are getting close to time, I'm going to go through and make sure I answer attendees who haven't asked a question yet. So let's see. Bailey says, good afternoon. I'm curious how you'll read the EE retention credits eligibility, saying that a government order restricting commerce qualifies the company for the credit as well, regardless of gross receipts reduction. Does not the governor's order keeping New Mexico businesses under 25% occupancy qualify all businesses in New Mexico for the EE retention credit?
Yeah, so it's a great question. Generally, the way I read that provision of they're shuttered pursuant to a government order is that you actually have to be that portion of your business. And if, like, let's just say you're a restaurant, your restaurant has to be shuttered in order to qualify. It is a kind of remnant of how they wrote this the last time. It's possible that you might be able to claim it that way, although I think it's easier to simply affirm the reduction in gross receipts and claim it. So I'm not suggesting that the questioner is wrong. It's just that the way that they've tended to apply it, you really do have to be, the effect of the order has to essentially be to shut down your operations.
Perfect. Let's see. Oscar asks, I applied for the EIDL using my sole proprietor EIN, and I was in the process of to switch to an S corp. May I transfer my loan to my new EIN?
I don't know of a reason you wouldn't be able to do that. Although in the process of doing that, that is something that I would want to check in with the SBA in this case about doing, just because, as everyone on knows, the government paperwork errors are just notorious. And so they may have a process that they want you to go through to do that. And I would want to make sure I follow that just for any risk or liability purposes. But I'm at least not aware of anything that would prohibit that, but I would certainly want to talk to them and understand how you go about that. And so, maybe reaching out to a regional SBA office or reaching out through their hotline would be a good first step.
Perfect. Daryl asks, is the employee retention tax credit taxable?
So it's a tax credit, so no.
Perfect. Deborah asks, would a venue like Meow Wolf, if you haven't been to New Mexico, Meow Wolf's an interactive art exhibition, or an amusement park be eligible to apply for the Shuttered venue grant?
Amusement park, I don't believe so. I don't know about Meow Wolf. It would depend on whether the particulars. Are you, in short, the way to think about it is, do you sell tickets? Do you pay performers, and do you sell tickets to people to watch that performance? And if so, and the performance could be a movie if you're a movie theater, a theatrical performance, if you're a theater, then you may be able to, in general, you should be able to qualify if 70% of your proceeds come from that. But not knowing the particulars of Meow Wolf, I couldn't say.
Perfect. I think we have time for two more questions. Hector asks, do I qualify for any tax credit, PPP, or loan grants if I had an 80% decrease in sales since the start of the pandemic and ultimately resulting in closing the business in late September of 2020?
So if if the business no longer exists, if it is closed, then in general, no, that it is. All of these are programs that are eligible for businesses that are open or are reopening. If you haven't legally terminated the business still exists, and you're reopening it, you may be able to qualify once you reopen it. And you may be able to use some of the proceeds from the PPP loan or employee retention tax credit to qualify. But if it's closed, if you're not reopening it, no, these programs really wouldn't benefit a business that is shuttered.
Perfect. It's 2:59, Neil. Would you like to continue with the questions? We have 22 left, or would you like to end the presentation?
Let's do one more, and then we'll get to Russell.
Thank you very much. Anwar asks, if someone qualifies for an increase to their first PPP, can they apply for that, get that, use it, then apply for the PPP round 2 before the deadline?
You should be able to. This is one of the one of the provisions in the new law says if as a result of these changes you qualify for more, you can go back to your original lender, you can get an increase in your first draw PPP, and that doesn't make you ineligible for the second draw. So I think worth figuring out is how much of that increase are you eligible for, and does it make sense to do that, exhaust that, and then turn to the second draw PPP, and it'll really just depend on the circumstances and how much value there is there in that increase in the first draw versus what you would qualify for under the second draw.
Thank you very much for spending time with us today, Neil.
Thank you, Chris. Great questions, everyone. I apologize we didn't get to all of them.
And Russell, I will turn it over to you for closing comments, and then we can end the webinar.
Well, thank you so much. And Neil, that was exceptional. Thank you so much for your willingness to come and share with us, and we'd love to have you back sometime. So he didn't make a plug, but it's my prerogative too. If you haven't checked out the U.S. Chamber of Commerce website, a great resource, great opportunity. If you're not a member, it's maybe something you want to consider as a small business, just to access to the resources and making sure that you have a voice and representation. We also make sure that everyone knows the value of a chamber membership. So we always recommend your local chamber membership opportunity, and the U.S. Chamber of Commerce is a great thing to explore for your business to see if it's appropriate. So I want to thank all of you. We will capture all of these questions that we've received. If you do have additional questions, you can reach out to the New Mexico Small Business Development Center, contact your local center, and we will get your questions answered, as well as get you set up for one-on-one counseling. And there are some future trainings that we have established. So you can go to nmsbdc.org, look on the website, and see additional offerings where we're covering. And again, as we said, as some of these rules get a little bit more clarified and the regulation, the SBA kind of tweaks and adjusts things, there'll be space. You'll want to keep an eye on that as the months progress here. So again, thank you so much, Neil. We appreciate having you on, and appreciate all of you in attendance, and we will capture your questions. And again, reach out to the SBDC, we'll make sure we respond. So with that, I'd like to thank you very much. Everyone have a wonderful week.